Hi everyone, this is lecture 16 of the 2026 mentorship program. And in this lecture, I will be doing a top-down analysis market review on this week live top-down analysis. Go. On the weekly time frame on the dollar index, on this week live top-down analysis, I talked about price we're expecting the weekly fair value gap. I showed you guys that as long as price is below the fair value gap, not filling in the fair value gap, my drawn liquidity is anticipating lower prices to run the sell side liquidity, which was the overall bias going in this week. Told you guys that I want to see that shift in structure on the daily time frame and the 4 hour time frame while anticipating lower prices to run the sell side liquidity. Now, price traded to the sell side liquidity is the overall target. How long will price take to run the sell side liquidity? Obviously, I wasn't anticipating the week to be the week to trade lower completely to run the sell side liquidity. Even if we do have a high impact news, we had NFP and we had CPI on the same week because NFP was postponed from the previous week. So it was all included on this week price action, which price did trade lower but it wasn't enough to run the sell side liquidity, which there's still a bias of anticipating lower prices. On this week live top analysis on the daily time frame, I told you guys that my first draw on liquidity is a daily point of interest, which below the weekly fair value gap and below the daily fair value gap, the draw on liquidity is the daily fair value gap to see a fill on the daily fair value gap, which I told you guys was my draw on liquidity. On Friday, price closed as a down close candle, making it a swing high, anticipating lower prices. On Monday, price traded lower, traded to the mid range of the daily fair value gap. Tuesday, price filled in the daily fair value gap. Wednesday, retracement into this daily fair value gap, anticipating lower prices from the daily fair value gap, which on Wednesday respected it closed below the daily fair value gap. Thursday was a ranging day within the range of Wednesday, and Friday took out Thursday's high and retraced lower. Looking at this price action, the first draw on liquidity leading to price trading lower to fill in the daily fair value gap was one of the most impulsive move this week that gave out a clean price action for you to take advantage of. And looking at this price action, seeing the internal shifts trading through the daily fair value gap, clearly you can see that the bias is now fully aligned with the idea in price trading lower to run the sell side liquidity. Now, next week we might see a retracement before actually trading lower. Depending on how next week will be delivering, I'm primarily looking at price trading aggressively to run the previous week low and go for this week below the opening price, which there will be a gap in price at the opening price. Want to see lower prices trade below and go for the draw on liquidity. On the 1 hour time frame on the dollar index, after the closing price on Friday, which you can see here, the closing price on Friday, after price took out Thursday's high, leading to a 1 hour shift in structure on Friday. So on Monday, I was anticipating lower prices, which you can see from the opening price. Price opened trading into the 1 hour fair value gap. Respected the 1 hour fair value gap, traded lower, did a retracement to a 1 hour order block. Price respected the 1 hour order block, leading to the impulsive price in price trading lower to trade to the mid range of the daily fair value gap on Monday. Tuesday open, price traded lower, filled in the daily fair value gap. Wednesday traded lower, took out Thursday's low, retraced higher into the daily fair value gap. And after the retracement into the daily fair value gap, now NFP news led to these higher prices, which I was anticipating lower prices, and I was stopped out. Which we talked about this when I get to the specific currency I use in taking the trade. NFP news led to these higher prices, trading higher into the daily fair value gap. And so far, prices have been consolidating, not much of an impulsive move. But if we were to look at it from a daily perspective, Friday took out Thursday's high, did an internal shift. It's more likely in price trading lower to run the previous week low. On this week price action, one of the best days for you to take a sell was on Monday because price delivered on Monday perfectly, trading lower. Throughout Monday, there was a real lower prices on the dollar index, leading to Euro USD trading impulsively higher, leading to GBP USD trading impulsively higher. And from the opening price, when price retraced to the 1 hour order block, I didn't take advantage of the setup. I can see that I missed most of the move on Monday. I missed most of the move trading into the daily fair value gap. Now it was because I don't resume my trading immediately from the opening price, which you can see. It was at the opening price that price did the trend lower, retracing to the 1 hour order block in trading lower. So I normally look at price during the London section on Monday. That's when I start my trading. If I were to take any trade, it should be around the 2 a.m. time period. So around the 2 a.m. time period, price was already expecting the order block trading lower, and most currency I tried to enter on a lower time frame, but there wasn't much of an opportunity in taking lower time frame trend trading lower. Personally, I didn't expect price to trade lower on Monday like this. I thought that saying that the London section was approaching price, taking out a swing low, there might be a retracement. So I had an entry at the other block, anticipating a retracement before actually trading lower. But clearly you can see price traded lower without the retracements. Now, most times, or you can say, depending on your entry techniques or whatever reason you use for your entry, depending on your personal entry techniques, in some cases in mine, I miss trades, I miss good moves because I have one of the tight entry plan, mostly use auto block. But at the same time, I use fair value gap when I find it more convenient or I missed out the initial trend. I just want to get involved before price trades to my targets. Those are times that I use fair value gaps. But in times like this, I wasn't looking at price retracing to any fair value gap. I was anticipating a retracement to a 1 hour or a block before actually trading lower. Which on Tuesday took advantage of the sell. Now, I don't trade the dollar index. I use currency correlated with the dollar index, which I've talked about many times in this lecture. That my major currency pairs I do take trades on are Euro USD, GBP USD, and USD JPY. So in USD JPY, I took a sell in a sense that I'm anticipating price to fill in the daily fair value gap. If there's going to be lower prices, I want to see a fill on that daily fair value gap. After the fill on the daily fair value gap, I closed the position, which you can see on Thursday led to a retracement to a daily fair value gap. Kept on anticipating lower prices. Now, I took a few losses because price did not trade lower immediately. You can see this is a full-blown consolidation. And being involved in a consolidational range, price will be hunting for your stops. Now, I'll talk about the specific trade, which in this lecture, I am personally showing you guys the trade I take advantage of and the trade I missed or how the trade played out. The point is that I'm trying to show you guys that I'm taking a live trade with whatever trade I'm showing you guys in this mentorship program. All are being executed on a live account. Now, to get to a stage where I will be showing you guys my personal journal, but for now, I need more data, I need more trades so that I can show you guys my win rates over a long period of trades. That was the reason I haven't shown you guys my trading journal, but I will be showing you guys my trading journal. And if we were to go back to the live live trades, or you go back to the trade reviews, look at those trades that I've talked about, you'll find those trades in my journal where I journal when I took the trade and how the trade later played out. Now, the journal wasn't perfect. There were some times I forgot to take a screenshot when entering, and there's later on when price was already running that I took the screenshot. But all in all, there's a live execution to it. The point is that I'm trying to show you guys that when you have a trade plan, there shouldn't be any hesitation in taking advantage of those setup which was developed from the trade plan. It's very important for you to learn how to execute. There are two parts in trading: learning the trade plan and learning how to execute the trade plan. Those are two steps that you need going in this 2026 mentorship program. On the weekly time frame on Hero USD, last week checked about price. We're expecting the weekly fair value gap, but I'm anticipating higher prices. And my draw on liquidity is to see price run the swing high. That's the overall draw on liquidity on the weekly time frame. Now, comparing this to the dollar index, you can see they're inverse correlated, so you can say they're still on the same bias. The difference is that I take trade directly from the Hero USD, not on the dollar index. On the daily time frame on Hero USD, on this week live the analysis, I talked about price. We're expecting the daily fair value gap. That my first draw on liquidity is to see price fill in the daily fair value gap. And if price were to fill in the daily fair value gap, looking for a retracement to use it as an inversion fair value gap to trade higher to run the buy side liquidity. On Monday, price traded higher, fill in the daily fair value gap. Tuesday, retracement. Wednesday, retracement into a daily fair value gap. At the same time, it's still aligned with the inversion fair value gap in using it to trade higher. So on the daily fair value gap, price respected the daily fair value gap, still inside the range of the daily fair value gap, price is still in the range. Haven't filled in the daily fair value gap. Thursday, ranging day. Friday, took out Thursday's low, retraced into Thursday's range. So far, looking at this price action on Monday, where price traded through the daily fair value gap, which was our first draw on liquidity. Looking at it as a continuation to use the inversion fair value gap as a support to trade higher was one of the key areas or the key points of interest that I was interested in going in this week. And I took a losses. I think I took two losses trying to buy for price to trade higher. Take, took two losses, which will be shown on the 1 hour time frame. But the idea is that price is still aligned with my bias. Those entry might be a little bit early, or price once ready to deliver this week, which clearly we can see that price only retraced back into Monday's range, currently supporting at the daily fair value gap on Monday. And paying attention to every individual candle, you can look at how the candle are running out the previous high, retracing into the daily fair value gap. The only difference in showing a buy momentum in this price action is the way price took out Thursday's low, retraced into the range. Those are key features in telling you that next week we might be anticipating higher prices, in a sense that price will be using the daily fair value gap creating a new swing high, or might say a trend continuation, running at the buy side liquidity. Now, I'm just pointing out those key areas for you to pay attention to. The price is still the same, and based off the trade idea, we're anticipating an up close candle throughout the week. Here's the opening price, and price closed above the opening price. On the 1 hour time frame, after the opening price, price traded above the opening price, running out the swing high, making it an uptrend retracement to the 1 hour fair value gap. Now, looking at this price action from on Thursday and on Friday, you can see the shifts in structure leading to higher prices on Friday. You can see price taking out the swing high, leading to this shift in structure. From the opening price, price created a swing high, retracement to a 1 hour fair value gap. Now, during this time, this is outside my trading period, which I tell you guys, I start my trading for the week during the London section. And 2 a.m. London section price already at an higher price at 2 a.m. So personally, I didn't take advantage of the setup. But if the setup were in my trading time, I would have taken advantage of it in anticipating price to fill in the daily fair value gap. So price traded higher throughout Monday. On Euro USD, price filled in the daily fair value gap. You can see Monday, price filled in the daily fair value gap. Tuesday, price took out Monday's high, retraced back to the range, leading to the closing price. Wednesday, price respected the daily fair value gap. That was the first retracement to the daily fair value gap. Respected the daily fair value gap, 1 hour shift in structure. I was anticipating higher prices, which NFP news led to me taking a loss on this trade. After price retraced to the breakers block, here's the breakers block, that was my entry. Price traded through the swing low, which I was stopped out, trading deep into the daily fair value gap. Thursday, internal shift running out the swing high. Here's the other block. Looking at price using the other block as a support in trading higher. Price retraced to the other block, respected the other block only as a point for a consolidation on a lower time frame perspective. Price traded lower and I was stopped out on Friday, took out Thursday's low, leading to price trading into Thursday's range. So overall, I took two trade, which both was a sell, and I was sorry, both was a buy trade, and I was stopped out from the swing lows. I was stopped out. The first stop loss was at the NFP news. Second was on Thursday, which price traded lower and stopping me out. On the weekly time frame on GBP USD, on this week live top down analysis, I talked about price respecting the weekly fair value gap that I'm anticipating an up close candle, and my overall draw on liquidity is a run on the buy side liquidity, which you can see how price from the opening price closed above the opening price, leading to higher prices. On the 1 hour time frame on GBP USD, on this week live top down analysis, I talked about price trading higher than my drawn liquidity is around on the buy side liquidity. That I want to see price run the buy side liquidity, but my overall bias is the weekly swing high. On Monday, price traded higher from the opening price, trading through this daily fair value gap. Now, if you're to look at this candle, look at the gap from this candle's high to this candle's low. There's a fair value gap, which you can see price traded through the fair value gap. Now, the reason I didn't mark out the fair value gap, I just want the chart to be a little bit free so that I can use it in explaining. Monday, price traded higher, trading through the daily fair value gap. I was looking at it as a point of interest where price might use as a support area in trading higher and running out the buy side liquidity. The overall idea was that price might use it as an inverted fair value gap, which on Tuesday price did a retracement. Wednesday, I was anticipating higher prices and price using the daily fair value gap as a support. Going in on Thursday, still the same idea, but price still closed as a down close candle. But on Friday, price took out Thursday's low, closed as an up close candle. And looking at it from a lower time frame, on the 1 hour time frame, there's a shift in structure. Looking at this price action, it's quite similar to the dollar index and Euro USD. Monday, impulsive price. Tuesday to Friday, retracement into Monday's range. On the 1 hour time frame on GBP USD, from the opening price, price traded higher, traded through the daily fair value gap, but overall target is to see a run on the buy side liquidity. After price trade higher, I was anticipating higher prices, so I took advantage of the first entry, which was from the swing low. My entry was at the other block. I was anticipating higher prices. Price to expect the other block in trading higher to the buy side liquidity, in which from the price action, price traded higher, traded around close to a 2 hour trade. Sorry, let me take this out. The trade was close to a 2 hour, but the overall idea was to see around a buy side liquidity. So I moved stop to break even before the retracement. And it was aligned with the idea in price using the daily fair value gap as a support. So I was still holding up to this trade. I only moved my stop to break even close to NFP because I already have position open on Hero USD. That if the NFP was to trade against me, which clearly price did trade against me during the NFP news, I should be stopped out on only one currency and the other one were to break even because they're still the same trade, still trading to the same buyers. I'm just taking it from a different currency. That was the first trade I took advantage of, which I was stopped out after the release of NFP news, which was on Wednesday. After I was stopped out on Wednesday, price traded, took out Wednesday's low, did a 1 hour shift in structure. I took a re-entry, price traded higher before the retracement, and I was stopped out on Thursday, which was the second trade. I was stopped out on Thursday, Friday, took out Thursday's low, did a 1 hour shift in structure, which I took a buy at the entry at the 1 hour fair value gap. Took a buy from the 1 hour fair value gap, price respected it, and before the closing price this week, I closed it as a 2 hour trade. Now, I don't hold trade throughout the week. I normally hold trade once it gets to Friday. I close it three candle before the closing price. So three candle on the 1 hour time frame before the closing price was at 2 hour. So it was a 2 hour trade closing in the week. Looking at this price action, now there was a comment on a personal trade I do take advantage of. I think throughout the lecture I've talked about trading a weekly expansion using the 1 hour as an entry. That have been the trade plan that I've been talking about in this 2026 mentorship program. I told you guys that I will be personally taking trades with that trade idea going in this year, which is going to be throughout the year. That's the reason I'm showing you guys the setups, showing you guys my thought process during the trade, how I did manage the trade that I moved stop to break even, which was this trade close to NFP. Already had two positions exposed. I had to move my stop to reduce risks. Second trade was on Thursday after price took out Wednesday's low and price was supporting on a new week opening gap, which was this week opening gap. Price was at this week opening gap. Looking at it as a support after the 1 hour shift in structure. Here's the breakers block. Took a buy from the breakers block. Price traded higher before actually retracing and I was stopped out. But on Friday, took another entry after price took out Thursday's low. Remember, price is still supporting from the new week opening gap, so there's still more chances in price trading higher. Did a 1 hour shift retracement to a 1 hour fair value gap, and that was my entry in anticipating higher prices. And you can see how price trade to a 2 hour before the closing price. The reason I'm showing this trade is to show you guys how to take advantage of the setup and how I do take advantage of the trade plan, how I do implement the trade plan. I show you guys some deciding on my bias, my thought process on the higher time frame, and the individual trades I take advantage of or I took advantage of. On the weekly time frame on USD JPY, on this week live chapter analysis, I talked about price trading lower to run the sell side liquidity. Actually, guys, my drawn liquidity is a trade lower to run the sell side liquidity because price is currently at a weekly order block and comparing this price action to the dollar index, they are correlated in the idea in price trading lower. On the daily time frame on USD JPY last week and on this week live chart analysis, I talked about price trading lower and my first draw liquidity is a fill on the daily fair value gap and to see a complete run on the sell side liquidity. On Monday, price traded lower, traded through the daily fair value gap, traded through the daily fair value gap. Tuesday, used the daily fair value gap as an inversion fair value gap, traded lower to the mid range of this fair value gap, which was my first target. Wednesday, filled in the daily fair value gap. Thursday, price traded lower, came close to the sell side liquidity, and on Friday, stayed within the range of Thursday's range. On the 1 hour on USD JPY, from the opening price, price traded lower. Now, looking at this price action on Monday, when price retraced to the daily fair value gap, I didn't take advantage of any setup because before the London section on Monday, price was already at the daily fair value gap, and I was looking at price using the new week opening gap as a resistance area to trade lower. So I had an entry at a limit entry at the opening gap, anticipating a retracement to the opening gap before actually trading lower. But you can see how price traded lower, closed, Monday price closed, Tuesday anticipating lower prices. After price traded higher into the daily inversion fair value gap because it was a fair value gap the price traded through. I was anticipating lower prices and I had my entry at this other block, anticipating price to use it as I think it came close to my entry, but I didn't get triggered on the trade. You can see I didn't leave a limit order or a trade position showing you guys that I took advantage of it. But price came close before retracing, did a shift in structure, a retracement. I had an entry on this other block. So it was a little bit frustrating missing out on three good trades, which the first trade price did not retrace the limit order. The second trade came close. And the third trade did similar price action. But after seeing the reaction from the 1 hour fair value gap, after seeing the reaction from this 1 hour fair value gap, I was looking at price trading that if price were to trade below the swing low, if there's a little brief of a retracement, I will be taking a sell and my stop will be placed at the swing high. The point is that if price were to respect the 1 hour fair value gap, there will be there should be a trend trading lower to fill in the daily fair value gap. So price took out the swing low after a little bit of retracement. When the first 1 hour candle closed, I took a sell, stop at the swing high, leading to lower prices. Mostly because at that point I was well frustrated in the idea that I've missed most of the entry. Now I told you guys it do happen on my own personal trade plan, but you can choose to use the fair value gap as an entry. You should have taken advantage of the setup from the first entry, which you can see there's a fair value gap that the 1 hour retraced to before trading lower. But I like to wait for those premium prices before actually taking a sell. So after price took out the swing low, took a sell, anticipating price to fill in the daily fair value gap. Price fill in the daily fair value gap created to my trade profit, which was a 5.2 hour trade, held it to the complete target, which on Wednesday, a retracement to the daily fair value gap, using it as an inversion fair value gap to trade lower. Didn't took any setup because looking at NFP news, I had a lot of position exposed on GBP USD and Euro USD. So there wasn't any entry at the other block, which I would have got, which price would have stopped me out. And same time, I was looking at the JPY index. So I didn't have much confidence in taking a sell. I was still looking at price after the NFP news. After NFP news, price did trade lower, took out the swing low. There was a fair value gap and an order block for price to use as a resistance area to trade lower to run the sell side liquidity. Now, personally, I didn't take the trade because from the distance in taking a trade from the order block, in my stop placed at the swing high, it wasn't much of a trade because it wasn't is looking at this trade from the entry price to the take profit is not even up to a 1 hour trade, so I didn't take advantage of it. So price did a consolidation, but looking at this price action, clearly we can see that price is failing to trade above the daily inversion fair value gap. Is a clear signal in next week in price trading lower to the sell side liquidity. So I only took one trade on USD JPY, which was this trade. Now, I will be talking about the JPY index in this market review because looking at this price action, it's not now the dollar did trade lower, but not that impulsively like the USD JPY. That was because there was a stronger JPY index. There was a stronger JPY index this week that led to the lower prices on USD JPY trading lower. So you can say whenever both currency are trading against themselves, like the dollar index trading against the JPY index, just look at the currency USD JPY. There will be an impulsive move trading to a similar bias to the dollar index. The reason is that if there is a stronger JPY index, it will lead to lower prices on USD JPY. So there was a stronger JPY index this week, and at the same time, there's a weaker dollar that led to this impulsive price trading lower. Came close to the overall weekly target compared with their Euro USD and GBP USD. So let's go to the currency. Here's gold and here's the JPY. This is the JPY index, and you can see the impulsive move, stronger price action. I was looking at another block, which you can see how price respected the other block, trading higher, took out the swing high. So make sure if you're trading the JPY pair, make sure you look at the currency index of the JPY pair. That will give you a broader perspective and it will help in your accuracy because when there's a weaker dollar and there's a chances of a stronger JPY index, that will lead to a good price action on USD JPY. So that is it for this lecture. Make sure you study through the price action. Remember, these are trade reviews for you to know where to focus on and to know my own personal idea and my own personal thought process when doing your back testing on every individual week. So that is it for this lecture. See you guys in the next lecture.